If you're a Malaysian, you're probably an investor and also contributor to the Employee Provident Fund EPF, which is Malaysia's retirement and pension fund. Now, if you do not know, the Malaysia EPF is actually one of the world's largest retirement and pension funds. In fact, it is among the top 15 largest in the world, with assets amounting to more than 1.4 trillion ringgit as of early 2026. So most Malaysians just have their wealth parked in the EPF for their retirement, and it takes up a large chunk of their net worth. So you better pay attention if you're truly serious about growing your wealth and making sure that you have enough for your retirement. So now let's talk about the basics of the EPF first. If you're an employee under 60 years old, you will need to contribute 11% of your monthly salary into your own EPF, and your employer will contribute 12% of your monthly salary into your EPF. So you would get a total of 23% of your monthly salary every month. This is if you're earning more than 5,000 ringgit per month. So if you're earning less than 5,000 ringgit per month, then your employer contribution would go up to 13% of your monthly salary, giving you a total of 11 plus 13 equals 24% contribution every month. So what if you don't work for anyone? You're the boss, you're self-employed. Then you can choose to contribute to the EPF or not to do so. If you want to contribute voluntarily to your EPF, then you can contribute a maximum of 100,000 ringgit per year under the iSaraan program. So can you withdraw money out of your EPF fund? Yes, you can do so when you reach the age of 55 years old, where you can choose to have a partial withdrawal or a full withdrawal. And when you turn 60, you can also opt for a full withdrawal if you didn't withdraw completely when you are 55 years old. Now, what about before you're 55 years old? Can you withdraw money? Yes, you can, but only to a limited amount. Now, there is this account called the flexible account. So every month from your EPF contribution, 10% of your money will go into the flexible account. Now, this flexible account is flexible, so you can choose to withdraw money out from the flexible account anytime you want without explaining what you're using it for. And it is subject to a minimum withdrawal of 50 ringgit. So the flexible account gives you flexibility. You can withdraw it for your own use or to invest it elsewhere, or you can let it remain inside the EPF account to keep on generating returns for you as well. Now, what if you haven't reached the age of 55 but you want to withdraw money, but your account flexible doesn't have enough funds within because only 10% of monthly contribution goes into that account? Well, there is still another way. There is this account called the account sejahtera, which is a special account which allows you to withdraw money for special purposes. So it can be for withdrawal to buy a house, you want to pay the down payment for the house purchase, then you can withdraw funds from the account sejahtera. Or you want to pay for your education, tuition fees, you can also withdraw funds for that. Or perhaps you want to cover medical expenses. Or for Malays, they want to go for Haji, so they can also withdraw funds for that purpose. So whether you want to withdraw funds from your account flexible, which doesn't need any reason to do so, or you can withdraw from the account sejahtera, whereby you can only withdraw for specific purposes, then what you can do is to apply for the withdrawal via the online iAccount portal or go to any EPF branch closest to you. Now let us talk about the more interesting stuff, the investment returns of the EPF. This is actually what determines how fast your money multiplies over time before you reach your retirement age. Now, if we look at the EPF track record, they have a pretty stable track record whereby they declared dividend payouts ranging from 5% to 7% across the past 10 years. Now, for the latest year, 2025, EPF declared a dividend payout of 6.15% for both the conventional and Sharia EPF accounts. And looking back at the past 10 years, the highest payout would be in 2017, where it declared an annual dividend payout of 6.9%. So that is pretty remarkable, but it is not the highest for the Malaysia EPF record. In fact, if you look back further, the highest dividend rate they achieved was 8.5%. This was during the 1980s, whereby the Malaysia economy was booming. And so you get higher returns due to higher economic growth. So how does the EPF actually manage your money? Now, if we look at their portfolio, it is diversified across equities, which are stocks in the stock market, and also bonds, which are fixed income instruments that pay you interest either semi-annually or annually, and also real estate and other asset classes. So real estate will be either residential or commercial properties that pay you passive income. Now, if we look at equities, stocks, they are the largest contributor, contributing to 68% of the fund's total investment income. Now, if we look at the geographical breakdown of their investments, since the EPF invests both locally in Malaysia and also internationally, for 2025, 61.7% of EPF funds were invested domestically in Malaysia, generating 49.6% of total investment income. The remaining 38.3% is invested globally, generating 50.4% of total investment income. So we can see that a smaller amount is allocated in international investments, but they contribute to a larger percentage of the EPF's total returns. There are two critical questions for you to think about. The first one, should you be investing more money into the EPF? And the second one, should you be withdrawing your money out of the EPF to invest it somewhere else? Now, let's talk about the first question first. Should you be investing more money into your EPF account? So there is this program which allows members to contribute an additional amount up to 100,000 ringgit per year into your own EPF for all members under 75 years old. So let's say you have already been contributing a portion of your monthly salary every month. You can still choose to top up that amount and contribute more up to an annual limit of 100,000 under the iSimpan program. So do you want to do that? So it depends on how you are managing your retirement fund. Do you have all your money just parked inside the EPF? Is that the only investment vehicle for you? Or do you also already have investments elsewhere in the stock market, in cryptocurrencies, in real estate, or other types of funds and assets? For me, personally, I like to diversify my investments. I don't want all of my money to be parked in just one fund or one asset class. I like to diversify because this is how you can spread your risks while also having the potential to earn higher returns. Now, one good thing about investing in the EPF is that it guarantees you 2.5% minimum dividend payout every year. So, even if it is a bad year, the EPF didn't make any money from their investments, they will still guarantee that payout of 2.5% minimum every year. So you won't have a year where you will get zero or negative returns from your EPF. And also when it is a good year, well, they will pay you between 5 to 7%, quite stable dividend payouts every year. But what if you can invest and get higher returns elsewhere? And if you look at the past 5 years, it has been a pretty solid track record for the US stock market. You can easily achieve returns between 10 to 20% easily, because most of the innovative tech companies are in the US, and the US have some of the world's largest tech leaders. Look at, Microsoft, Nvidia, Google, Meta. They are all in the US, and the US has some of the most innovative startups. So you look at those IPOs for the tech startup companies. They are also very hot, and they easily command valuations more than $1 billion. And if you look at the Malaysia stock market, it is comparatively much smaller, and also there are less innovation happening here in Malaysia. So if you invest in an EPF, already a large chunk of your money is invested domestically in the Malaysia economy. So as I have shared earlier, about 60% of the EPF total investments, it is parked in Malaysia assets. So if you want to diversify your risk, spread your risk globally across different countries, then don't just put all of your money inside the EPF. You can either withdraw some money out, or when you have spare cash, don't put it as additional contribution into the EPF, but invest that money yourself in the stock markets of other countries, or perhaps even in cryptocurrencies if you can take more risk. And also you can invest in properties, whether in Malaysia or in other countries as well, for passive income. Now, if you're not so much of a risk taker, then go for properties, because properties give you relatively stable annual rental yields, and this is just passive income for you, right? As a landlord, you just collect money every month, and it depends on which properties do you own and in which countries. There would be different types of returns and different types of laws as well. Now, the next question, whether you should be withdrawing money out of your EPF to invest that money yourself. So you can actually withdraw money out of the account flexible to invest it yourself elsewhere, or for whatever purpose you want to use it for. Now, the account flexible, it is 10% of your monthly EPF contribution that you can withdraw out, and each withdrawal is a minimum of 50 ringgit. So you can actually invest that money elsewhere, whether you want to buy stocks, crypto, or properties. Now, properties would be more expensive, of course. You would need a larger down payment, so maybe the amount that you can withdraw out from the account flexible isn't that much, but well, you can still withdraw money from the account sejahtera if you want to finance a home down payment purchase. And for the account flexible, you can just withdraw money out to invest in stocks or cryptocurrencies, which require lower amounts to start. So these days, there are so many types of brokerage accounts. You can easily open one and then start investing from even 50 or 100 ringgit. You can already buy stocks and also cryptocurrencies. So these days, it is so easy, and the bar is so low that anyone can do it. Like, even teenagers are starting to invest already. So there is no excuse for you to say, it is too hard for me, I don't know where to start. Just start learning. Now, there are also many types of ways that you can invest your money more safely. I do note that stocks and cryptocurrencies can be higher risk. So maybe if you are closer to retirement age, you should not be investing too much of your money in higher risk asset classes like stocks and crypto. You can still invest in stocks, but you can choose safer stocks like the blue chip stocks that pay dividends. So these are more stable and less likely to be subject to huge declines when the market crashes. So you can go for the safer stocks, or you can choose to go for different types of investment funds which are structured to protect your wealth. And if you want to learn more about how to actually invest yourself, whether in stocks or cryptocurrencies, I do actually run an investment webinar that teaches you how to diversify your investments and build a portfolio that pays you for life. So in this webinar, you get to learn for free about the stock market, whether in Malaysia, in the US, the different types of stocks, and also we'll look at cryptocurrencies as well as real estate and other managed investment funds as well. Because to me, I think that diversification is one of the best things ever. Just spread your investments across different asset classes, and you don't have to worry too much if one of them, face a huge decline because the market crashed the next day, or some news came out that affected one stock that you own or something. Just diversify, and then you can sleep comfortably at night knowing that your assets are all spread out and not just parked in one thing alone. So if you want to learn how to do that, then join my investment webinar. The link is in the description section below, and also feel free to ask me any questions that you have. And if you want to learn more about finance, of course, stay tuned, subscribe to my channel, and stay tuned for my next video. Thank you.